Hi, I'm Connie from Prosperity Finance. Thank you for coming to our channel. Now, you probably heard that Reserve Bank has dropped OCR to the lowest point to 1.5% last week. Now, as a result, the bank also cut their interest rates. In this video, I'm going to share with you what is the interest rate they're offering by the banks today, and also what is the trend going forward. Finally, I'm going to give you some tips. If you have a loan about to draw down or your loan is coming out fixed term, you need to refix, what you need to consider. Okay, let's have a look at the interest rate. So I have prepared a graph for you. Now, the purpose of that is to show you what is the leading rates for each term, but also give you an idea what is the trend, like which term is the lowest, which term is the highest, etc. So that when you consider your loan structure, you can have a good balance. So firstly, we can say that the 1 year rates after the OCR drop, it has dropped to 3.89%. Almost all the banks are offering these rates right now. Very, very attractive. The second best rates is the 2 year rates, 3.95. And then after that is the 3 year. It looks like the same as 2 year rates, but not all the banks can offer that. This is the best. So all the 3 years are now within the 4% versus 4 and 5 years actually above 4%. Just bear in mind that not all the banks can offer those best rates. Some banks promote 1 year, some promote 2 years, some 3. So it depends the strategy. But also, if your loan is investment property loan, you may not get these rates. Now we notice some banks like RBNZ, they have a two different pricing model. One for owner-occupied, which you can get those kind of rates. But for investment loan, you will expect at least 25 basis point higher. So this is to just give you some idea. Now the trend going forward, well, lots of economists predict there will be another cut, OCR cut, by the end of this year. However, also Reserve Bank may require a higher capital for the bank to hold, which means the cost of borrowing is going to be more. So one is rate cuts and one is cost increase. So they may cancel each other, so offset. So in my view, over the next 6 to 12 months, the rates may stay the same if the increased capital requirement do pass, or there might be a further drop into the interest rate. So it is a good idea to consider those shorter term, like 1 year or 2 years rates, so that you have so you are ready really to make adjustment should the rates do drop later this year. However, I always say not one size fits all. If you have a really large loan, you are an investor, you have a lot of loans, make sure that you balance the interest rate saving versus certainty. So make sure you stagger your loan into different fixed terms so that not all the loan come off at one time. Give yourself time to make any adjustments. And also, if you expect your family net cash flow decrease or uncertain, then it's also a good idea to have more certainty. So at least lock some of your loan into a medium to longer term, so that you can have the best of both worlds. Okay, so that's pretty much it. That's the main interest rate update. If you find this video useful, please feel free to share this video with your family, friends, and if you like our content, please do subscribe our YouTube channel. We have weekly best financial tips to share with you. Thanks for watching. I will see you next time. Bye for now.